Hello, promoted markets. This is Ahura with NFP updates. We're going to check the NFP numbers for October and market reactions. As always, let's first check the data and then we can see the market reactions. Data somehow had a surprise with only 12K newly created jobs in October. Uh, it's much less than 223K in the previous month and 106K expectations, but still, it's not such a bad number, and market somehow can ignore this number. As you know, we had too many problems in private sector, including Boeing and some other factors. In one hand, in other hand, we had two horizontals last month, and these horizontals that we had, they could somehow hello, promoted markets. This is Hura with NFP updates. We're going to check the October NFP numbers and market reactions. As always, first let's check the data we had, and then we can see how market can react this data. With only 12K newly created jobs in October, somehow that can be the surprise. But we know about the streaks that we had in Boeing and other companies in one hand, and another side, we had two storms last month. These things that happened during October means that the 12K newly created job should not be a surprise, and we must be aware about the effects of these storms and stress that we had during the month. So this 12K newly created job, it's a weak data, weak number, but it's not such a big surprise. That's why we can see that unemployment rate still is the sales remains at 4.1%. At the same time, in other numbers, they were not such a bad. So, for example, we can see the average earnings increased by 0.4% in October in 1 month, and in the annual scale increased 4%. Both of them up higher than previous months. So with 4.1% unemployment rate unchanged in one hand, and with 4% average earnings, while the average weekly hours also increased to 40, remains stable at 34.3 hours. So these numbers generally means that the labor market is still fine. Despite, unlike 12K newly created job with 62.6% participant rate and with 4.1% unemployment rate, the labor market still remains fine. We cannot say that it's a resilience, but it remains fine. Let's see how the market reacted to these numbers. So with the somehow weaker than expected numbers, we can see that the US dollar is under pressure, lost its power, lost the steam. But in a bigger picture, we can say, as I told, in a bigger picture, we know that the reason of this big number. So that's why market can somehow ignore this 12K on NFP. So generally we are, within the US dollar index in a general, in a bigger picture, we are in a slow downtrend, and this slow downtrend can still continue. But as long as the US dollar index is above 103 mark, we can say that the dollar index is still resilient and still strong. So the dollar index is fine, but still we are expecting a slow downtrend. With the slow downtrend US dollar index, we can expect the higher prices for gold, while the market risk also is higher, including the numbers that we had in a labor debt in one hand, in other hand with the geopolitical tensions and US elections. So generally, with this data, we can say that the US dollar index can be in a slow downtrend. But the gold market can be still in a can still continues slow uptrend and can continue higher. We can expect the higher numbers in the gold chart. On the stock market front, yeah, these data means the weaker data for weaker data in the labor market, which means that the U.S. Central Bank or Federal Reserve can continue its dovish tones and can continue cutting the rates. But as I told, these numbers are not a surprise. The numbers that we had, they were not a surprise. We were expecting to see these data after the storm and after stress that we had. So they are not a surprise. At the same time, the earnings that we had with the main companies' earnings, which we had already, and we are not going to see any other surprise in the earnings reports. So we can expect it for the next weeks and this week to close lower than expected, so close lower than the Monday open. But for the next weeks also, we can expect a slow downtrend in the stock markets to continue at least until Federal Reserve meeting and U.S. election. So for now, we are expecting slow downtrend in the stock markets, slow downtrend in the U.S. dollar index also, but U.S. dollar index cannot last too much. Well, we can say that even I mean this downtrend when we were talking about the downtrend, not really the downtrend. We can say mostly the side movement with the down tendency. Better if to say that than to say downtrend. And gold slightly to slowly to move further in its uptrend that we have. This is the market reaction. So downside movement with downside tendency for US dollar index, gold uptrend can continue higher for the stock market. With the data that we had, we can expect that stock market can still be under pressure and can continue its slightly downtrend because we didn't have any surprise in the stock markets. This is generally what we had and what we could expect from the stock markets and generally from the financial markets. If you had any other question, do not hesitate to write down in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.